Welcome back to all our network members and the YouTube channel subscribers. This is Siwin Yi from the University Network and our network real estate partner in the Southwest Florida market, Justin Watney. Welcome, Justin.
Hi, Mr. Yi.
Thank you for your time. I know you're busy writing contracts. Time is so precious for you. You are still doing well because your market provides a lot of value and long-term growth for primary homeowners out there in your market, as well as out-of-state real estate investors. And our network members have enjoyed working with you for the past few years. They have done well, and we can talk about that and what's going on with the current market, what's going on with the future of the Cape Coral market. First, I'm going to share the screen and talk about something else first. Let me start with the Redfin data in Cape Coral and Southwest Florida. Justin, I will ask you a couple of questions throughout the next 4 slides. You can provide a high-level answer because you know all the neighborhoods, all the specific areas in your market. Without further ado, the Redfin weekly data, Cape Coral pending sales. The pending sales has been this black line is the year 2022 has been going down ever since back in April of 2022. The pending sales have been decreasing due to various reasons, higher interest rate and low affordability. As you can see, the trends has came all the way down year over year 2022. From the 2021, there was a decrease of 44% pending sales. So sellers are not selling sufficiently and the buyers are staying on the sidelines. Pending sales has been decreasing drastically in the past 9 months to a year. A new listing, same thing. The sellers are reluctant to list their home because many homeowners right now throughout the country and Cape Coral are no different. They are locked in at their historical low interest rate, 3.5% 30-year fixed rate mortgage. They have little motivation to sell, given the current interest rate environment is around 6 or 6.5% currently, although the interest rate has been trending down. As you can see, the new listings have been going down ever since the early part of the last year, 2022, to a point where it's minus 10% year-over-year decrease in new listings year over year from 2022 to 2021. Let's go over the month supply. Months of supplies are important because it's all about economics 101. When demand exceeds supply, then we have a rising real estate market, and a healthy balanced market is around 5 to 6 months. And in this current data, as of December 25, 2022, in the Cape Coral market, the month of supply is 15 months. 15 months divided by 4 months equal a month, with almost 4 months supply of inventory. Is still technically a seller's market because 4 months supply inventory is below a balanced market of 5 to 6 months. That's what I see right here. And finally, I'm going to go over the medium sales price. Medium sales price year over year, many of our investors, through you, Justin, thank you so much for helping our investors from out of state buy cash flow rental properties. Look at the missed opportunity on this unique once in a lifetime opportunity back in 2021. If you look at this median price in Cape Coral back in less than 3 years ago, the median price is at $238,000 as of June of 2020. If you fast forward to June of 2022, 2 years later, we have seen a 35 plus almost 30. That's what 35 plus 30, like 65% total appreciation in a mere 2 years. This is the peak of the market back in June 2022. I know there has been price reductions all over the country. Some markets are more of a price reduction than others, but Cape Coral have a slight correction. No way it's not a crash based on the lack of inventory moving forward. But it has the median price at the peak back in June 2022 in Cape Coral, like $420K. Then, however, 6, 7, 8 months later at December 25th, 2022, it has decreased to 385, around 10% reduction of prices on a big picture. But still, for the investors, anybody who bought in the past 2 years in Cape Coral through you or any other sources, you still have a year over year, December 2020, at median price of 282. Now the median price is 385. People still gain 18% plus 27%, around 55% average appreciation. However, real estate is hyper local. down to the neighborhood, down to the house. Depends on what neighborhood one bought in Cape Coral. Some of the appreciation in the past 2, 3 years has been more than 60%, sometimes even 100% appreciation in 2 years. We will never get back to this unique market that occurred because of historical low interest rate, 3.5% 2 years ago. Moving forward, it'll be a healthier market, more stabilization. When I expect this triple digit appreciation anymore, the investors that bought through you from my network have done well, even if their homes have decreased in value by mere 5 or even 10%. You know why? Because there's a slight correction in value is on paper. If you do not sell your property, it's not going to affect you. Besides, we train, Justin, you and I train our investors to buy and hold long term, at least 7, 10, 15, 20 years down the road. That's how we reap the benefit of real estate investing, buy and hold long term. That's my takeaway for this Redfin data. Before I segue into my remaining 2 slides, let me share. What are your takeaway from the Redfin data, which I should share from a high level? What is your quick takeaway on that?
The 3 biggest points. The first graph where we were showing the supply, the number of homes being sold, it's cyclical here in Southwest Florida. We're an area where there's a large number of snowbirds. We always see the most activity between January and April. If you look at those graphs, that continues where we see the most early in the year. It slowly tapers off through the year. Those graphs almost line up perfectly. I mean, following the same path we always see. That final slide showing the median sales price, again, that's a perfect graph. I can't believe how perfect that is. If you look at it, those lines each year, they never intersect, right? What does that mean? It means if you purchased and you held on to it for 1 calendar year, you made money. No matter what point you bought and sold it, you made money because that graph always goes up each year. And even at the worst point, I think your year over year appreciation was 8% at the lowest. That's great. That's double the national average. Right? The national average 25 years is 4.25%. If we're getting 8% at our worst, we bought at the worst possible time and sold at the worst possible time, we had 8%. That's great.
Yeah.
That's more than we ever run a projection with. I mean, these graphs are great. I mean, I don't see anything concerning. We even see prices increasing early in the year, just like we would expect for 2023, and prices are higher than 2022. Again, all signs are this is a strong, healthy market, still poised to make investors plenty of money moving forward.
Exactly. What do you think about, I know Redfin data, sometimes they're not totally 100% accurate. What about the 16 weeks of supply, which is a 4 months supply of inventory? Is that a little bit misleading? It's probably less than 4 months.
That's a generous number. I mean, if we included every home on the market, there might be 4 months. I can tell you we have homes listed right now. Yes, it's considered inventory, a home on the market. It's not a home someone is moving into, right? It's a hurricane damaged home being sold at lot value with the intent of it being torn down for a developer. Yes, that sale would count as a house in the supply, but it is not a move-in ready home that's going to help that demand at all for another 2 years of construction. I think that 4-month number is generous. I can think of in that neighborhood alone where I have the listing, about a dozen homes in the exact same condition that they're being sold, they're being torn down. It really doesn't help the inventory, helping the buyer demand to move in for another 2 years before those homes are ready.
Yeah, I would agree. My takeaway in the Redfin data is similar. I mean, the trends are all clear. Is the trend is just a slight correction. But momentarily, I will show you another graph that will really validate officially with hard data what the people out there need to learn and understand. And they will know this is real estate is not going to crash under the current economic conditions. People just don't listen to the negative headlines, the fear porn, YouTube videos out there. It's all clickbait. Anyway, so yeah, Justin, of course, you're on the ground. You know your market. You know the market better than anybody else. And you are a turnkey provider. You will do a one-stop shop. You will help out-of-state real estate investors to buy great cash flow turnkey properties. And you also help homeowners in the area as well, primary homeowners, to buy their home to live as well. So Southwest Florida market is a very robust long term. We talk about the explosive rent growth in a high inflation market. Now, inflation is at the highest rate in the past 50 years. People need to understand, especially real estate investors, when you buy a cash flow properties, even though the cash flow may not be as high as you would like because of a skyrocketing of appreciation, and the rental rates always lags behind the appreciation rate. So having said that, this slide clearly indicates that whatever the inflation rate is high, the rental rates increase will correspond to that as well. If you look at a chart in the past 50 years, the inflation and the rents has been pretty normal until you hit around 10, 15 years ago. There's some fluctuations, but let's focus on the past 10 years with some stable inflation, stable rental rate increase, 3 to 5%, whatever. Then the pandemic hit, as you can see, 2020, we have seen some low supply inventory, inflation behind. Look at the rental rates throughout the country has skyrocketed, double digit, triple digit in many markets in a year ago, 2 years ago, including Florida, have a lot of rental rate increases because the influx of people moving to Florida during the pandemic and even currently and moving forward. Investors buying even right now in Cape Coral market, your rent will to go up based on inflation. That's a good sign. With that in mind, Justin, what is your takeaway?
The first thing I'd be curious about, there is a small dip there in 2020 where it showed rent going down. I'd be curious to see the breakdown on that of rent from large cities to rent in suburban environments like Cape Coral. I can tell you without a doubt, rent did not go down in 2020 in Cape Coral. As a suburban area, people were moving to Cape Coral, rent skyrocketed. I would guess that dip is heavily influenced by large cities, New York City, DC, LA, where people were leaving as quickly as possible, not areas like Cape Coral when we start looking at a local example. That's the first interesting thing I see there. The second part of it, I can tell you 100% of the time when a lease ends and a tenant renews, I have never once not increased the rent. The rent has always gone up. Might be $50 a month, might be something small. It has always gone up here in Cape Coral. During periods where a tenant may move out of a home at the end of a lease and we place a new tenant, I can tell you the rent typically goes up significantly more than if we were new. And sometimes, and we have some examples of a tenant chooses to move out, we release it $300-$400 a month higher just because that's where the market standard is at that point. Very strong numbers supporting over time, rent will continue to rise. Your costs are very fixed with that mortgage, and we just continue to increase that cash flow year over year.
Yep, I agree, Justin. Hold that thought. The graph I just shown, those statistics, those rental statistics, I believe I've done a lot of research on this, and a lot of people out there, they got it wrong. Those data, like you said, are mainly derived from apartments, multi-units, renting on the major cities. Let me tell you one thing that 99% of the people do not understand. With respect to single family home rental data, there's no data out there will have a clear cut or from a nationwide perspective that show any kind of data like this. I say it again, single family homes or even duplex and fourplex, this cookie cutter rental homes, there's really no national consistent data to show the percentage rent increases and decreases. How do people know about the rental increases with respect to rental or single family home rental? They have to go to a local market. They have to go to a specific local market. They have to talk to the manager to look at the 2 or 3 mile radius. Or you know what software I use, which I share that with you from time to time. I use Rent-O-Meter. This software gives you a real time. For example, if you want to do a 2 mile or 5 mile radius, you input the 3-bedroom, 2-bath in a specific area, and then the rental meter will show what has been the rental rates on a monthly basis in real time up to today. Those are the best localized rental data for single family home rentals. Yeah, I just want to put that in. But the big picture, yeah, on that, I agree. If risk investors, the cash flow may not meet your expectation moving forward, at least on a first year projection, but you must understand as a long-term investor, you expect to raise your rent in align with inflation. With that in mind, let's go over 2 more slides. This slide, a good point from a big picture. It's clear that ever since the last real estate crash back in 2008, starting from 2008 until now, really for the past 15 years, there's a shortage of homes. The builders are not building enough homes. There's not enough homes based on demand. And this graph clearly indicates for those of you out there think there will be a real estate crash, I mean, it ain't gonna happen because the job report, we have more jobs. The unemployment rate, the nationwide unemployment rate is only 3.5% of people are not working. Job report is even in a recessionary period, potentially. However, you look at this graph from Altos Research, look at the single family homes statistics. Goes back to around July 2015. We're talking the past 8 years. We need about 2 million homes. You look at year by year on it's trending downward. The supply of inventory has trending downward year over year up until now. Now, some of you are thinking, how come it's high here and low down here? Well, I'm sure it's a seasonality. Toward the last few months of the year, now we always have a slight downward trend. But look at this low supply of inventory to a point where we are, and even though many markets in past few months, we have a rise of inventory, but a rise of inventory compared to 2021, which is have a historical low amount of supply of inventory. Even with high supply inventory, up to around almost 500,000, you need way more than 1.5 to 2 million homes to have a balanced market. Look at the downward trend. January 2023, we still have a low supply of the inventory, around 3.5% supply of inventory nationwide. And the balanced market is 5 to 6 months. Clearly, even though there's a national chart, your local market, Cape Coral, Southwest Florida, is similar, if not worse, in terms of lack of supply of homes. When the pent-up demand, especially when the mortgage rate hopefully goes below 6% in the next 2 months, we're getting closer to a less than 6% mortgage rate. So we're going to see a pent-up demand. And when a pent-up demand, when spring season right now, people are motivated to buy homes. We have seen some bidding wars in select housing markets in the country that could be similar in Cape Coral as well. Definitely there's no real estate crash absent any bad situation. What do you take away on this particular graph, especially in relate to your market, Southwest Florida, Cape Coral? What are your thoughts on that?
The downward trend of available inventory is even more drastic in Cape Coral. Go back a couple months, there was a major hurricane here. I can tell you, even myself, there are a number of contractors from out of state who have rented homes because it's less expensive to put contractors or other different workers into a home than it is to keep them in a hotel. They're expected to stay here, depending on the trade, for 2 to 5 years. What little inventory we have for local families and people who live here was used up even quicker because now we have all of these trade workers who are also trying to get homes. We had a home on the market last week. Took 1 week. I had 6 applications submitted and it's being rented. Took us a week. I mean, there's clearly not enough rental homes to meet demand right now. That getting 6 applications that quickly is not normal under any circumstances. That's extreme demand for not nearly enough supply.
I totally agree. Let me segue into the final slide I have, and then you can, I'm going to do a pro forma. This pro forma cash flow analysis is a batch of inventory that you're working with a builder locally. They're promoting this particular home. But before you do a deep dive into this home, when I did my calculation on my software, these numbers, you couldn't ask for a better number for a real estate investors to buy something like this. So let me briefly go over the high level, the numbers, and you will validate what I'm saying, as well as why right now the builder incentives, why are still happening. Some will go away. I believe when the pent-up demand, when more buyers are entering the market, because right now the spring season is really, really hot, not only in Cape Coral, but other areas of the country, we are seeing a lot of pent-up demand. People are getting off the sidelines. So as a real estate investor, right now, the competition is not that high. Perfect time for you to do a great deal with the buyer incentives and what have you, pay down the mortgage rate. For those investors that wait too long, if they can wait 2 more months later, guess what? When all the pent-up demand is going to occur, there will be more competition out there, and you'll be competing against another investor or another homeowner to buy this high quality cash flow, limited amount of homes. You can get involved in a bidding war all over again. I'm not saying the bidding war is gonna push up your price double digit in appreciation. The bidding war will be, 3 or 4 or 5 offers per house in a few months from now, if that would happen. But the bidding war is not gonna, achieve tremendous asking price above and beyond the selling price. So we're not going to expect, skyrocketing appreciation at least for the next 2 years for the time being. But right now, if you look at some of these opportunity with the builder you work with, Justin, here's my calculation. Okay, I mean, give or take, this is just a projection. A single family home, brand new construction in Cape Coral is only 325,000. Nice cookie cutter, 3 bedroom, 2 bath, brand new. You put 25% down payment. You buy down the rate with the builder incentive. You can buy down the rate all the way down to 5.75% on my projection here. Now, it all depends on what kind of loan program you do as an investor, but I'm just using a projection. So your down payment, 25% down, 81 grand down payment. The rent, look at this rent, $2,300. I challenge any investors out there, you can buy any rental properties where for this price, 225K, and getting a nice, healthy $2,300 monthly rent. And then you minus vacancy loss, you minus monthly property taxes, insurance, and 8% property management fee, and your mortgage at 5.75%, 30-year fixed rate mortgage, which is 1422. At the end of the month, your projected monthly cash flow is a little bit more than $200. Now, you cannot ask anything more than this. And I also projected 5% appreciation rate annual and year over year. The numbers on the upper right-hand corner, I'm not going to go over, the numerical formulas. The rent to value ratio is very nice. Capitalization rate exceeds the benchmark, cash and cash returns, the whole 9 yards. What more can you ask for? This is just a first year projection. Buying a rental property, as I educate many of my members and other YouTube subscribers out there, a rental property is a multi-dimensional asset class. You benefit 5 different ways: rising cash flow, passive income, the renter pay down your debt and your mortgage over time, you get appreciation potential year over year, historically 5%. Then you get tremendous amount of tax benefits. You get to leverage. You get to get a amazing 30-year fixed rate mortgage where you're gonna outsource someone by the name of a tenant, gonna pay down your mortgage. What more can you ask for? So this is one of many opportunities you have right now. The window opportunity is very small because builders very soon, I could be wrong, Justin. You tell me, your builder, what's going on out there. This builder's incentives can go away once the demand will skyrocket for home buyers out there in the next few months as we are heading into the spring 2023 buying season. So what's your takeaway on this pro forma? Not only that, what kind of building incentive you're getting? What are the value play? What are the all those kind of things that savvy investors, they must look at this data and make an informed decision right now.
We'll take this in 3 parts. We do have 3 different markets that I still think are phenomenal. They're great opportunities. First one would be from the pro forma you just showed, which is North Cape Coral. There's a neighborhood called Gator Circle. They have 3-bedroom homes, that low 300s, 4-bedroom homes go up just slightly, still low 300s, puts you right around 330, 340 for a 4-bedroom home. Rent's 2,200, 2,300. Demand for the rent is off the charts, which is the most important part. We're going to have very, very low vacancy. The appreciation potential is there. When you're buying a home 25 minutes from the beach in the low 300s, there's only so much it can go down. Eventually, it's going to go back up quite a bit in some cases. Rental increases, still, you saw the last 4 years worth of history. It's going to continue to go up over time. There's great opportunities. They are offering up to $15,000 in closing cost assistance if you use the lender that's in-house for the builder. So great opportunities there. The next market that is also very good, we've had a lot of success in, is LaBelle, Florida. They have 3-bedroom homes in the high 200s right now, probably around 280 or so. 4-bedroom homes, they're about $10,000 to $15,000 more, so still in high 200s. Rents were $2,000 to $2,200 a month. Really, really strong rental rates. And our vacancy in LaBelle has been phenomenal. Very rarely have homes come available. And when they do, they're filled very quickly. There's just not a lot of rental inventory at all in LaBelle. LaBelle is about 85 to 90% owner occupied. So rental opportunities are few and far between, which is why when we do go for rent, we got a great rental rate and a ton of demand. Same thing in LaBelle, they're offering up to $15,000 for using their in-house lender, including cost assistance. Final opportunity would be South Cape Coral. That's the market we worked in the longest. Prices are hovering the high 300s, low 400s right now. Three-bedroom homes right around 380, 385. Four-bedroom home puts you in the 390s. Highest price, largest investment, certainly the highest rental rates. You were getting 2,500 for three-bedroom homes, about 2,700 for a four-bedroom home. So great rental rates there, great cash flow. But here's the biggest thing in that market. You go with particular homes. They only make this available for certain homes that are available. But if you go through the in-house lender, they're getting this was 2 weeks ago, so we have to check on the exact rate. They were offering promotional interest rates. At the time was 6.25%, as well as another $15,000 towards closing costs. Really strong opportunities there where they're giving you a promotional interest rate a little bit lower than what you would get elsewhere. And they're giving you money towards closing costs for using their lender. Long-term potential on these homes is phenomenal as we continue to see rental increases, as we continue to see appreciation go up in all three markets. If we look at the oldest home that someone from the real estate network has purchased, the performance is phenomenal. You're not going to find anything else like it.
We talk about several of our past investors that purchased in the market 2 years ago. Can you quickly run down before and after?
Yeah. We'll go kind of take it market by market. Gator Circle area of Cape Coral. Oldest home that we managed there was purchased. Again, in all three examples, the real estate network looking about 3 years ago on the purchase. First one was purchased at the time. It was low 200s on the purchase price, around 220 or so. So we've already seen about $60,000 worth of appreciation, about 30%. Rental increases at the time. Rent was about 100 a month. That's all the way up to $2,300 a month for that home. And we took a home that was already cash flowing a couple $100 a month when it was purchased. We just put $500-600 a month of additional cash flow on top of it, and we saw tens of thousands of dollars of appreciation, all while someone else bought down the mortgage balance. I don't have exact numbers in front of me, but we're talking about $100,000 worth of potential earnings in a matter of 3 years. Very strong numbers. We move out to LaBelle. The same thing. That home at the time, first home that we helped someone with, was purchased in early 2019. It was purchased for $165,000. That home, again, probably I'd say about $80,000-90,000 worth of appreciation. It's been 100% occupied. I mean, we had a renter, and within a week of the closing, that same tenant still is there. Never changed. So 100%, nearly 100% occupancy. The cash flow has increased. I mean, the performance is truly phenomenal. Then finally, South Cape Coral, same thing. We're talking about rents having increased about $400 on that first home. Appreciation over $100,000 at this point. The best one of them all is the duplexes. First duplex that a Ye real estate network investor purchased. It's appreciated $150,000 and cash flow is going up. We rented it originally. It was $1,450 per side. So $2,900 total rent. Market value rent on that same unit today is about $2,200 per side. So $4,400 per month in rent when it's fully occupied. So we've seen $1,500 worth of increase in cash flow. That was a property that was already cash flowing at $2,900. Just incredible growth. And truthfully, the markets are all poised for that increasing cash flow, increasing value trend to continue, which is phenomenal news for any investors looking to purchase.
Yeah, Justin, we don't have time to go over all the case studies. We have many, many more, not only among my network investors, but you have other out-of-state investors from other part of the country to over the past 2 years to do very well in your markets. For the sake of time, I know the past performance is not an indication of future results. We want to provide this disclosure. We don't know. You and I, we do not have a crystal ball. But my question is, there's still a lot of people out there in this YouTube world, are still waiting on the sideline. They're waiting for the market to crash. I'm not just talking about Cape Coral. I'm talking about nationwide. I hear YouTube comments on a consistent basis. Some people say, "Oh, I'm going to wait until the market could crash further. I'm going to wait until the value of the homes go back to pre-pandemic level." I mean, these people, I don't know who they are. Why such a large majority of Americans out there, they are trying to time the market. They try to wait. They're waiting in the sideline. For those that can afford it, I know a lot of people cannot afford to buy anymore because we're at a 40-year low in terms of home affordability as a result of the skyrocketing of the home prices. And and higher interest rate right now. I get all that. But the people that seemingly qualified to buy, whether they are primary homeowners or whether they are real estate investors, it does not matter. My takeaway is a lot of these people are still waiting on the sideline. They think there'll be a lot of foreclosures out there coming down the pipe. They think housing prices nationwide and even in Florida, their perception, you and I know better because we are professionals. We study, research, data, and validated that during our presentation. The data is very clear cut. And yet, a lot of people, maybe they are irrational or they are very emotional out there, especially many risk investors. Even with the few that have purchased, seemingly, you and I would think they are very experienced investors. They purchase within our network or they purchase other rental properties in the past few years. Most of them are still staying in the sideline, hoping and praying, thinking housing prices are going to crash 30 to 40 to 50% more before they will pull the trigger. What is your takeaway? What is your response to some of this irrational thinking? They can wait in sideline, they can time the market by the pre-pandemic level. If they buy pre-pandemic level in Cape Coral, for example, the pre-pandemic level is 250K. And right now, median price is almost 500K in Cape Coral. Or they can wait until the price go down pre-pandemic level to at 250K to buy. These kind of people are just strange, weird. It ain't gonna happen. Think be waiting forever. Okay, what's your thoughts?
If I could find a way to get people homes for $250,000, I would know what to do. I'd be way too busy, right? Everyone would be buying with me. It's just not possible. The cost to build a home is almost $250,000 in materials and labor. Forget about the land that it sits on. Forget about the profit that the builder is going to make. It's just not possible. I think that the real cause for the fear, for the, oh, I'll wait for the crash, I think a lot of it is two things. One, it's a recency bias, right? We had a very large real estate crash in 2008. So everyone can't wait for the next one because they can't wait to make a bunch of money when it happens. And two, it's the amount of data that people can look at and get caught up in the graphs and the numbers. I can look at a graph from the last 25 years of real estate values. And I'll go, oh man, see, if I bought it here where that graph is at the bottom and I sell it up here where the graph is at the top, oh, I'll make a lot of money. Our part is where the graph is down here at the bottom, no one actually knows it's here at the bottom until we're all the way over here going back up, right? So no one actually knows when they bought it here. Same thing, selling it up here. No one knows they're selling it up here. We can hope. No one can predict that. I think that people get very caught up in always trying to buy low and sell high. It's not a great strategy. It's buy it, hold it. You're never going to find a graph where 20 years later you hold your finger here and here, right? You're selling it at a loss. It doesn't happen. The other side, recency bias. There was a crash in 2008. It happened. The prices got very, very low. You could buy a home for nothing. There have been about 3 major real estate crashes in the last 100 years. I'm not talking about the stock market, which goes down and has crashes regularly. I'm talking about real estate, home prices. There have been about 3. If you can predict the next real estate crash about 15 years after the last one and you nail it on the head, good for you. I want to start investing my money with you because I can't do it. I don't think anyone can. I think anyone who says they know it's happening is just guessing, right? I just don't see how we could have the supply that we have, the amount of demand that we have, and somehow see a crash. The numbers, the data doesn't support it. If anyone has anything different, please let me know. I'd love to know when that crash is going to happen. But again, looking at the data historically is just not likely. It's simply not, that the conditions aren't there for it.
Justin, I agree. We focus on real estate investors and how to buy and hold for long term. It's not about timing the market, it's time in the market. It's not waiting to buy. You buy real estate and wait instead of wait to buy real estate. So, I can go on and on with all kinds of philosophies. It's all about taking action. It's about a strike when iron is hot. It's still cash flow out there. You buy in a growing market such as Southwest Florida, Cape Coral. There's two words I want to say, 2 philosophical statements as applied to your market. One is ahead of the curve, and 2, path of growth. That's what we're doing. You are taking investors and any other real estate buyers out there in your market to pick the right neighborhood, the right street, the right block, the right path of growth based on your unique understanding because you are on the ground. You have a pulse of the market. You know what out-of-state investors look for. You buy for cash flow, long-term buy and hold. You push the market. Southwest market, Florida is a 100-mile radius. There are so many areas of path of growth beyond LaBelle and beyond Cape Coral. We're talking Lehigh Acres, there are Port Charlotte, Northport, so many sub-markets, so many neighborhoods that you are going to take our investors over time beyond today, years and years to go. And you have a turnkey approach. You provide a great client service. I'm not saying this because my investors bought from you. They are telling me you're providing value add, tremendous client service that they have never experienced with other investment property they bought from other markets. So you know that I've been telling you that. Long term, you're going to help us investors to do a remote passive turnkey approach, invest for long term. You're going to manage the properties every step of the way so they could free up their time to achieve generational wealth. It's all about achieving financial freedom goals. Before I let you go, any final words of wisdom from you?
It's the same advice I have every time. If you've even considered buying a rental home and you think maybe there's a right time down the road, get in contact with Mr. Yi, find out where you're at. He's going to put you in touch with me. We'll discuss exact opportunities that we have that could fit your exact situation. And like you said before, it's not about timing the market. It's not the amount of time in the market. Waiting almost never works out, right? Best thing you do, find an opportunity today, get the cash flow today, increase that cash flow over time, increase that value over time. In 15, 20, 30 years down the road, you're going to look back and go, wow, what a great buy. You're not going to go, man, if I waited 3 more months, I could have made more. Very unlikely.
Very well said, Justin. You are a very young man, I think. Do not disclose your age because you have a long-term business model. So investors can be reassured you're gonna help manage their properties for years and years to come to the next generation if necessary. You have longevity in the market, being as young as you are, as good as you do at your job, and you have a system, procedure, and process in place, make it very easy for other investors to buy through your market. Thank you so much, Justin Zawatney. Thank you so much. And I'll see you on the next video, and let's pull the trigger. Let's do the deals. Thank you so much for your time. All right. All right. Okay. Bye, everyone.